What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up on the left. Of course, we have our broad market, our core list of companies, and this week I have 9 trade ideas to share with you towards the end of the video. Sorry I couldn't make it a nice round 10, but I'm just not seeing it out there in the market this week. Many of these trade ideas, probably 7 of the 9 actually, came from Discord members, so if you want to chat with myself and other traders in real time, definitely check out the links down below in the description, and the Discord's down there. It's completely free. Without further ado, let's jump into the analysis. Kicking things off on our SPY weekly chart, talking about candle structure and location as we always do. And for structure this week, we've got a fairly bullish candlestick, right? Let's think about how this actually unfolded. Here was the low of the prior week. Here's the open of this week. So opening on a large gap down, we will discuss that more when we get to the daily. From the lower wick, we can see there was a drive lower. From there, the close of the candle, obviously we retraced the drive lower. We filled the gap, and then we moved to close inside of the prior week's range. So from a structural perspective, I would argue a very, very bullish candlestick here. Also in terms of location, right? Sure, we did make a new low, but we were able to close back inside of the prior week's range. Obviously, the next thing we would want to watch out for is, can we make a high above this area right here? Obviously, more nuance will come when we drill down to the daily, but that's a good start here from the weekly from an overall perspective. The next thing I want to take a look at is, of course, our trend lines, right? We've been always using this one as the first one to monitor for here inside of the S&P, and what we will notice is that we didn't quite come into it, right? Sure, there was the most distance from the high all the way down to it, but now that we've gotten this pullback, right, I would say it's significant that we didn't quite come all the way into it, and we actually came in a little bit early. So to me, uptrend still intact, simply based on that fact. If we do something like this, obviously we know that, no surprises here. This one has been broken now for 2 weeks, but we aren't quite back testing yet. I wouldn't really say that's too critical to watch at this point in time. And then the last trend line that we sort of have been using is this shorter term one, something that would look like this. And what you'll notice about that is kind of, that's right where we opened on the gap down. So I'd leave it up to you on whether or not you want to continue to have that on your charts. For me, not so much useful anymore, just noting that, again, it was violated, but it wasn't broken in a significant way. So maybe that's a reason to leave it on. Again, more up to you and your personal preference, but noting that these higher lows are continuing to form with this shorter term support trend line. Let's drill down to the daily now and talk a little bit more nuance on how this move actually unfolded and what we can look for going forward. If we take a look, obviously the thing that's jumping off the page, at least to me, would be that we now have 2 candle closes above the blue line, which of course is the infamous 50-period simple moving average. Now that we have that, of course, that's going to put things back inside of more of a bullish environment. The next key thing would of course be a break of the resistance trend line, what we have right here, right? If we can get a break up and over that, then I would argue the target should be moving back into this range, the high end, right? So we do technically have 3 poor highs, 3 equal highs right in a row, right? That number is going to be 448.34, but after that, I'd just watch out for 449 the whole dollar to act as resistance at the top end of this prior range, right? That's where the breakdown really stemmed from, and obviously we're moving back up and into it on candle closes above this 444, right? So that is the upside case here inside of the S&Ps. Obviously, after that, walk up your 450.75, an all-time high after that. But do I really think that that is going to be the likely scenario as of this upcoming week? Maybe not. Keep in mind the move that has already unfolded inside of the S&Ps, right? We've essentially come from the lows, let's call that, just for round numbers' sake, 429, and have rebounded all the way back up to 444. That's a very substantial move. But what's substantial about it is essentially the fact that it's a 100% retracement of this downdraft, right? Let's go from the high of the breakdown day, that last Friday, when we broke down out of the range. We'll drag the Fibonacci's all the way to here. And when you start closing candles up above the 61.8, so notably the tone for me shifted on Thursday, right? When we started getting acceptance above that 61.8, the likelihood of a 100% retracement drastically increases, right? And now that we've closed 2 candles above the 50 SMA, again, that is going to bode well for the bulls, but keep in mind, a pullback here wouldn't be completely unreasonable off of the 100% retracement area. So on any pullbacks, what's the key to supporting for a higher low? I would make the argument that it's really going to come down to Thursday's low, simply noting that if we clean this up, let's get rid of those fibs here. If you remember what happened on Thursday, right? The initial drive higher was like right out of the gates huge drive to the upside, right? And that was basically very emotional short covering or people just wanting in on the move higher, hitting the buy market button, right? So that's what we think about Thursday's activity, and anything underneath that starts to prove those people wrong, right? And that would also be sort of back underneath that 61.8 Fibonacci, which we just had on the chart. So that to me is the line in the sand. If we are to get any sort of higher low pullback and then reattempt that 444, you would look for this to break on the second go to again take us higher into these areas up in here, notably the poor high, the triple top there at 448.34. So that's what I'm thinking about to the upside. To the downside, if we break down underneath, again, that sort of 61.8 slash this 439.66 area, I would keep a very close eye, not so much on the 436 anymore, but really a breakdown here. This is the line in the sand at that 433.43. If you're not familiar with where that number is coming from, please go back and watch the midweek market update from Wednesday. I'll link it up above here. We go into detail on why that number is so important. So please keep that one on the top of your radar. The next thing I want to do very, very quickly, and again, this is more akin to what we do in the midweek market update, is just check in on our three heaviest weighted sectors. We did promise some sort of update here, and what you'll notice is that after Wednesday, what did we do? We recaptured back into this overall range up here. So again, the market's not really going to roll over until, if it was going to roll over, rather, let me rephrase this on how we did it Wednesday, we would have rejected here on Thursday and Friday, right? Simply wasn't the case. So I don't see a market rollover coming based on the XLK. XLF, same exact thing, right? We had the inverted hammer back testing the low end of this range. If the market was going to break down, would have done this, but now instead we're back inside of the range. So not bearish at all inside of the XLF or the XLK. And then lastly, the XLV for the healthcare sector, third heaviest weighted sector here. Again, on Wednesday, we were sitting right at this. We've now recaptured back above. Now, granted, not nearly as strong as the XLF or the XLK, but keep in mind, as we've said a number of times now, all of the legwork that the XLV has done for the S&Ps over the past couple of months, right? Really, really pulling its weight there inside of the S&Ps. And this is still just not nearly enough to consider this a bear market here inside of the healthcare sector. This, I would say, is just a small benign pullback, getting some acceptance lower. Maybe people are loading up here for the next leg higher. You can't say for sure, but again, in an overall uptrend, this is just a completely healthy pullback in my opinion. So that's it for the S&Ps. I just can't see the case for it continuing to break down. And again, you have the bull scenarios. If we head back on over, the break of the resistance trend line after a higher low pullback, something like this, seems like a very likely scenario for me, that's what I'm seeing inside of the S&P. So hopefully that was helpful there. Let's take a look on over at the Qs now, talk about the NASDAQ, and a very similar picture, but not quite the same. Obviously, we're a little ways further off of the resistance trend line, but we are still firmly above that 50 SMA here, and we did also fill the gap, right? So things are still looking up here, but there is some room to go into the resistance trend line. What's most noteworthy to me is the fact that we have back-to-back sort of inside days here, Thursday and Friday, above that 50 SMA. The easiest thing to watch for here inside of the QQQ would be, can we get the breakout up and over this horizontal area, also the low end of this balance, right? That's at the 374.40. If we do, look for a quick bump in the road at the resistance trend line, and if it breaks, up to 379 it is. Again, that would bode well for the S&Ps moving to the top of their range as well. Whichever one starts breaking and acting as the leader, watch for the other one to follow or be more reluctant to move in the opposite direction, right? If this does continue to consolidate here, if the S&Ps do pull back for a higher low, look for this to hold as critical support. That's 370.25. Note that the 50 SMA is there as well. It's also a double bottom here, so be careful there, right? You're not buying this as a pullback low. You just want to see it hold and then potentially make the move here, because if it breaks, where are we going? I would argue probably back down here towards that 365, the equivalent of that S&P critical number, which we mentioned in the downside cases. So those are my thoughts inside of the Qs. Again, very similar, but all going to boil down to probably this horizontal area instead of the resistance trend line. Again, that's 374.40, give or take. Let's wrap it up here in the broad market with the IWM and Russell 2000 and the small caps. And once again, not a whole lot to report, but what I think is, most noteworthy about this is that through all the turmoil, this has never signaled aggressive risk off, and it's never signaled aggressive risk on. It continues to just hover around the midpoint of the range in here, and until it really starts telling us, hey, there's going to be a big market correction, aka breaking this 208, Then we brace for impact in the S&Ps and the Qs, right? Until that happens, neutral risk, not being overly bearish or overly bullish inside of the S&Ps or the Qs, and the same thing to the upside, right? Just neutral risk. If we start taking out this 234, fine, start being more aggressive in the S&Ps and QQQs, and if we don't, again, you just remain a little bit more neutral, smaller position size, not so aggressive on the breakout buys, rather waiting for aggressive pullbacks like we got over the course of last week. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Kicking things off here with Apple for our companies. This one's going to be a bit of a tough read, and the reason why is because we still have a lot of overhead resistance here. I really don't think things get going until we can clear that 150 zone, which we discussed in last week's video. Now, don't get me wrong, there's plenty of range here for day trades to be had, but from a swing perspective, again, I'm just not seeing it here so clearly. There seems to be a lot of overhead resistance tightly compacted here that we do have to work our way through, not to mention also the 50 SMA and the back test of this support trend line, right? So there's just a lot of things overhead here that don't make this the most attractive option, in my opinion, here to be long of, but nonetheless, you have some levels to watch out for. If we do move higher, the critical break, in my opinion, really happens over the 148.76. From there, again, you're walking up these very small ranges to the upside, 150, 120-ish, and then that's where things open up, right? We've talked about this in last week's video as well. That's kind of optimistic over the course of this week, especially noting that we've already done so much work coming off of this draft lower, right? So from in here to the downside, if we do get rollover at all of this resistance, the line in the sand for me is going to be here, right? Right around here at the 144.50. Now, why is that? Well, because you'll notice we have touch 1, touch 2. When we break it, that proves anyone who's short here to be wrong. If we get back down into it, they get another chance to essentially take Apple lower into that 138-ish zone, which we discussed from prior videos. So that's my line in the sand, 144.50, and to the upside, as you know, things kind of get going up and over that 148.76 as it sits, though, just not really seeing this as the cleanest setup of all the things that we watch. Moving over to Netflix, do keep in mind the earnings blotter was showing up on the little ticker thing here. It'll show up again in a second, but earnings are still a little bit further out, right? Midpoint of October, so some time here, but Netflix usually is the earliest of all of tech. What we're noticing is that if you remember back from that, we actually very conveniently have the fib still on. If we come in from the low of this move, if we could get a click, thank you, Thinkorswim, all the way on up to the high, what you'll notice is that this breakdown still is holding that 38.2, and by breakdown, I simply mean this downdraft right here, and we're starting to get going back to the upside. So I like that. I like using the fibs to correlate with critical areas that we've already had mapped out, right? So to me, the only thing in Netflix to do is either look for longs up and over that 593.15 to retarget the all-time highs, or we chop around in this range. You can play responsive off the top to go back to the bottom, off the bottom to get back up to the top. And if we get down to the bottom and we start breaking down, right, that's where you look out below. This is probably not the trade I would advocate for. Again, remembering that we are holding the 38.2. We also have this set in here. We also have this 565 coming from, if we scrunch the chart up, you can see this prior shelf of resistance. So to the downside, I'm just seeing a lot of things standing in the way of clean activity lower here, just like in Apple, right? We're not seeing it to the upside. In Netflix, I'm just not seeing it to the downside. So I'd be very careful underneath that 575 and rather just wait for some sort of structural bottom to be put in place, whether or not it's inverted head and shoulders that looks like this, neckline here, break to the upside. There's a number of ways it could pan out, right? But really just being patient and waiting for some sort of structural bottom instead of trying to look for puts to take us into some of these choppy levels underneath. And again, from a day trading perspective, fine. But from a swing perspective, lower, just not seeing it as of right now. This, to me, this break here for upside looks much more attractive, especially noting what happened on Friday. There was a drive lower, retraced, closed right at the open, essentially just below resistance at this 593. To me, just looks like it wants to move higher into the top end of this range. The broad market moving higher would obviously help this one. Tesla is up next, and this one is just on fire. I mean, my goodness, it looks like back to back. The market tried to push it lower here. Broad market moving lower, made its way higher. Obviously, with the gap down, tried to push it lower here, made its way to the breakout point, and broke out further on Friday. So a breakout is officially in play here in Tesla. it looks phenomenal to probably move into 800, right? Definitely a bump in the road as noted by this prior high in here, but 800 is really the number to be watching for as an upside target. On any sort of pullbacks, because we did just make a new significant higher high, you could watch for a breakout retest. So what that would mean is if we come back down to revisit that 761.35-ish area, just call it 761 the whole dollar. If we start printing hammers here, if we start printing indecision dojis, basically anything that makes you question, right? Is this just a back test? Can we flip long over the highs and then get back up on course for that 800 number? That would be how that would unfold, right? So definitely looking for that as first support. And again, because we did make a new higher high, it would be acceptable, although probably not the ideal scenario in my opinion for a pullback buy at the support trend line if we want to revisit it in the future, probably the latter half of the week, right? You wouldn't want to see this happen early on doing something like this after we just got a breakout from Friday. So those are my thoughts on Tesla. It does look, like one of the strongest of all of the stocks on our typical watch list. You have the upside targets and the downside pullback areas if, that's how it ends up unfolding. Alibaba, continued train wreck here. Not a whole lot to say. I've cleaned up the charts. It's just not worth trying to monitor all these gaps. The main thing I would watch out for here if you are so inclined to trade it is this range right here between 154.50 down to about 149.50, right? So, however, that's about a $5 range. We're either going to see a look below and fail. So we move back in. Maybe there's a gap up into this range. Your target would be the top end, right? Or we don't get all the way into the range, right? We back test here. You're looking for resistance for another rollover. Maybe there's some sort of gap. I'm just not seeing it, right? So that's kind of the main thing that I would focus on for the upcoming week. But overwhelmingly, I mean, this thing is really just deteriorating and deteriorating rapidly over the course of the last week, just not even being able to hold up above the most recent lows. We'll see if it even remains on the videos for the future here. But again, let me know in the comments maybe. Facebook is up next, and this one still looks good to me. Obviously, the pullback here was very aggressive. There was some bad news that sort of accompanied that whole Evergrande thing, which brought the entire marketplace down, which sent Facebook notably lower into Wednesday, right? But from then, retracing a majority of this, right? So anyone who was short late to the party in here has already been proven wrong. This could be, say that very lightly, the start of a small short squeeze, maybe to make its way back up towards the 50 SMA, basically into this area in here, right around this 360, right? We basically want to see if we can get anyone who is even short in here to start covering and move, or essentially get prices back up towards those highs. That number, again, is right around 360 I would watch for to the upside. If we can get any acceptance above that, that's where things get interesting again for a 50 SMA target and probably the top end of this range from in here at that 367, we'll call it for round numbers' sake. That's the upside targets over the course of the week. After that, obviously, you can look at what we have on the chart. Underneath us, though, obviously don't want to be involved to the long side if we take out the cluster of lows here. I don't really think it's likely given the structure of how this has unfolded, but if we do take out that 342.17, you are looking for lower. I would argue this, technically is just below here at the 337, but I would watch out for this, right? That would be the next major shelf that I could identify as a structural area of support around 330 as a downside level, right? So that's what you would watch out for on the break of 342.17. Next up, we have NVIDIA. And NVIDIA here is looking phenomenal as well, making a move back into its range, right? So we have this, and now that we're back inside, wouldn't be surprised to see some consolidation, and then maybe a poke up to the top end, the all-time highs essentially around 230. The line in the sand to hold to the downside is simply going to be the low end of the flag here. We printed a small-bodied hammer on Friday at it. That's 220. As long as we remain above, again, look for some consolidation here, maybe a breakout over the midpoint, just that 225, we'll call it for round numbers' sake, to get to the top end, another $5 at 230 as discussed. If we break down under 220, where are we going? Probably this double top from in here, I would argue, instead of the lows that we've just put in. So let's grab that price level tool, and that would be the number to watch here at the 214.18, 214.25-ish area. Again, noting that we had double top in here. Any pullback could potentially be a higher low, right? So call that the major low. If we bounce here, right, do something like that, that could also be a higher low. Wouldn't be the end of the world, but wouldn't be the ideal way, which I would like to see this pan out. Obviously holding that 220 area right here for that upside continuation. Microsoft is up next. What do we see here? If we take a look, zooming in, Microsoft has been resoundingly resilient, right? I wasn't looking for resoundingly, but it has been resilient over the course of the market sort of deteriorating a bit. Notice how high and tight it is here to its highs, quite literally, whereas everything else is kind of off a little bit, right? A little bit lower here. So Microsoft, definitely some relative strength in this name. What I will note is that it is holding up inside inside of the bottom end, kind of just like NVIDIA there, but a little bit better in my opinion. Some more candle acceptance inside as opposed to that small bodied hammer at the low end. So the line in the sand here is going to be your, let's call that 297 for round number's sake. The breakout point is up and over this cluster of 3-day highs, right in here at $300.25 to get us back into the all-time highs, essentially, right back up, which is going to act as a pressure cooker top at 305.50. A break there puts into play blue sky territories, whole and half dollars, intraday levels that do form on something now trading up and over 300. So that's the upside case. Obviously, on a violation of that 297, we'll call it, we're looking for a move probably back down into the 50 SMA. So blue line here, you'll also notice that it's coinciding, at least right now, with this horizontal area. So we had a touch here, as well as here. That's going to be at 294.13. We'll call it for round number's sake. Any pullback, again, just like we talked about in NVIDIA, let's call that the major low. This would then be your next higher low. Not the ideal way we want to see this pan out, but it would still bode well for trend continuation to the upside. Last but not least, we have Amazon, absolute beast here. Although as of recently, again, kind of off of its highs, not nearly as strong as Microsoft, NVIDIA, or Tesla even. But what I want to point out is the resistance trend line, right? This is very similar to what we have in the QQQ, and that I think is going to unlock the door for higher. So if we can take it out, the first area to watch out for is here, right around that 3,500. And we talked about this in the past, that this is going to be a major breakout point. If we take it out, look for the gap to probably fill up towards that 35.81, noting, of course, that the pivot high from in here, that 35.50, will be a bump in the road. But I would argue that, again, on a stronger break there, the gap fill will likely be the thing that people are watching for, not so much this high from in here. So those are my thoughts to the upside inside of Amazon. And again, all being unlocked via that resistance trend line. If we roll over at it, though, then what do we get? Probably trend continuation lower, noting that we have high, lower high, lower high. And what are our lows doing, right? We have low, lower low, and lower low here. So technically, short-term downtrend, and again, doesn't change until we break that resistance trend line. So we would expect a rotation to the low end here to make at least an equal low, and that's going to be right around 3,300. And again, there was a catalyst that caused this, right? So the Evergrande thing is what kind of put that on the map. So I'm not saying it has to get there, but it just wouldn't be the most favorable situation for longs if we roll over at the resistance trend line and the 50 SMA here. Probably just watching out for a slow drift lower into, maybe it's this low, right? Maybe it's that 3350-ish area here instead of all the way down, which required a catalyst at the 33, let's call it 3310, right? For round number's sake, noting that we have 3309, 46 there. So those are my thoughts across the companies. Now let's get into these trade ideas. Quick reminder to hit the thumbs up button, hit the subscribe button, hit the bell button, all that good jazz. You know what to do, and let's get right into these ideas. So first one is going to be on X for United States Steel. Quite simply, a tight little range that's forming right here. What I like about it is the fact that we already tried to, well, not already tried, but look at this breakdown from on, what would that have been, Tuesday, right? Then we retraced into the range, and now it's just been inside bars the remainder of the week. So we're waiting to see if we can get a breakout up and over 2233 to start to fill the gap up towards that prior Friday low at 2311. So decent little meat on the bone there. Note that the 200 SMA is in the middle, so maybe that's a quick hang up, but definitely a day trade at least available up and over that 2233 breakout point. Not interested in the short play to the downside, noting that this lower wick kind of already failed on Tuesday. So again, just this trade kind of nullifies underneath that 2159. Next trade idea is going to be on KR for Kroger. This one's not my favorite. This might be a little bit more of a longer term idea here to watch out for, or rather it just might require more patience. That might be a better way to phrase it rather. If we can get some sideways action into the support trend line, that's going to be a buy, right? Note that we have this touch 1, 2, 3, 4 here. So very solid fit in terms of support trend line. We had this sort of deviation from the trend, right? The trend was kind of more like this. And now we've pulled back and retraced a majority of that. So looking for a bit of a buy reaction back at the support trend line now that this thing has sort of come back down to earth after the earnings gap down, right? So maybe a long trade idea here if the structure is put in, right? Looking for hammers, indecision dojis, sideways consolidation, anything that holds the trend line and then takes out some structural high, right? To get back up into. I would argue the first target to really be watching would be in here, right around that 43, we'll call it, noting that the 50 SMA is there as well. Stop loss would obviously go underneath the low, and not interested if we just violate the support trend line, right? That would take this trade idea off the table. Next up, we see SQ, and this is pushing into a resistance trend line after a number of touches, right? So we have anchor up here, touch one right, very, very closely after, 2, 3, 4-ish kind of broke it. And what I like is, again, hammer candle on Friday right off of the 50 SMA, high and tight to the resistance trend line. If we take it out to the upside, our targets are going to be right around in here. We're looking at 273.41, so that's a quick trade, right? That's probably a day trade, and then you can monitor for continuation if you'd like to turn this into a swing. You'll obviously have to buy the time on the options, but for a move back to the all-time highs. Obviously, the broad market moving higher would bode well for that trade. That's up here around 286.50. To the downside, not interested probably if we start getting acceptance underneath this 256, right? Noting that we had prior support, then turned resistance. If we get, down underneath, not so interested in this trade idea anymore, to the upside for the resistance trendline breakout. Next up, we have Z for Zillow, and this one's interesting, noting that it's showing relative weakness, right, compared to the market. So looking at this flush point that's clearly been established at 90, and what you'll notice is we have to actually grab some more time here to see where our next target underneath would be from the daily, right? So just using the cursor as a quick eyeball test, this area of congestion, so high and support in here, is very, very close to where we're at. So I would argue the next major one to pay attention to would kind of be right around here, right? And the reason we're picking out, let's just call it 80 for round numbers sake, right, is because it was this pullback low before this leg higher. So watching for a breakdown under 90 for about a $10 range to the downside there. Also noting that if we look at the more recent price history, let's take out the resistance trendline tool. I don't know if this will be the best fit or if we'll have to adjust it, but noting that we have lower highs in place, you could even do a shorter term one, right? Something like this to here, and that's a pretty good fit as well. So overall, just a flush point at 90 here in Zillow. Not interested in the trade if we get up and over those resistance trend lines. Instead, might be able to flip long over this area right here. Let's just throw that on the chart as an interesting dynamic. That would be up and over $100.72. Call it 101 if you will, up and over the 50 SMA. You can start to retarget this area in here right around 111. So interesting, $10 ranges on either side of the trade there. Next up is going to be Dash, and Dash is very similar to what we saw in X, but I think the setup is slightly better, to be honest with you. If we look at this and this, obviously on the gap up, this lower wick did fill it, right? So the gap has been filled, that structure has been repaired, and that would indicate that if sellers were going to get a foothold, right, they should have done it here as the gap was filling. They should have closed it weak and continue to get bar closes back inside of this prior range, but it wasn't the case. Instead, we had a look below and fail, right? Technically, this is a look below, failed back up into the range, and we fulfilled the target of the top end. Now just monitoring to see if we can get a breakout up and over 225.50 to get us into, actually didn't want to do that. I wanted to do this and put this back down to 1 so we can see here. There we go. So what we're looking at is kind of an all-time high breakout, right? We would kind of be headed back towards, there's not a whole lot of structure here, obviously, but up and over this 225.50 could put into play the 256, we'll call it for round number sake. And again, does it happen all in one day, something like this? Probably not. Does it happen all in 1 week? Maybe, but it could take some time to unfold. But just noting, there's not a whole lot of structure or resistance here from prior history. Next up is BLDP. Not so familiar with this chart. However, I really like the flush point / range that's just in place here. Again, this one came out of Discord. So looking at 1458, 1460, if you will, as a flush point. To the downside, you're simply looking at this in here as a target. You might also look at this at the 1369. So still about $1 range here. And again, on something sub 20, that's pretty decent, right? And to the upside, not so interested in the trade if we obviously bounce, and definitely not interested if we start taking out that 17. To the upside here, noting that this is just simply a range. So watching for the breakdown here inside of BLDP. If it happens, great. If we go on over to the trade tab, what you'll notice is that if we expand the chain here, there's not the best options volume. But based on the volume that's actually going through here on a regular basis, I would venture to bet that this is shortable via shares. So that's an option for you if you do want to play it to the downside there. Costco is up next, and just great relative strength to the entire market, right? Huge move higher on the earnings news, obviously, after hours from Thursday, right up to the highs, right? So what we're watching for is just, can we get continuation into blue sky territories on something that's trading now just shy of $500? You're probably looking at $5 marks, $10 marks, as well as dollar marks, not so much the 50 cents, right? So 500 might start to act as a magnet overhead, watching to see if we can get the breakout up and over this, let's just call it 470 for round number's sake, noting that this upper wick here, the true all-time high, is just about 30 cents short, okay? So that is Costco looking for upside. Obviously not interested if we can't get up and over this hump here. Any higher low pullbacks do hold this 463 area, so watching out for that. AUPH is up next. This one we actually cover semi-regularly regularly on the other channel that we have here, Trade Brigade Video Charts. I'll link it down in the description. I haven't really mentioned it in the past here, but tend to put out some analysis there as well. Looking at 3-day highs, right? Little pressure cooker top here at 24, the round number, give or take. If we get the breakout higher, what are we watching for? Well, if I did that, obviously there's nothing we can see. Let's scrunch up the chart, see if we have a prior all-time high. Let's grab some more data and see what's going on. 3 years, let's try. And what we're looking at is essentially all-time highs, right? Or highs at least we haven't been to in a very long period of time. So on something that's trading, again, sub 25 at this point in time, 25 is probably going to be your target as the psychological number. And then after that, probably 10-cent marks, 25-cent marks, 50-cent marks, whole dollars as we move into blue sky territories. Not so interested in the trade if we fall out of the consolidation underneath our 2276. Lastly, we have URBN for Urban Outfitters here, and a bearish trade idea, honestly. If we look at this, what you'll notice is that this is falling out of, this is a bear flag, and it's falling out of a prior consolidation range. So there was a lot of value, time, and dollars spent up in this area. And now that we're falling out of it, I do think that there could be a larger move to the downside as people kind of bail on the company, right? So underneath us, what are we looking for as support? Probably just down here as the first target, right around 29, right? So a break of 31 puts into play 29, a nice $2 range there. That could either be a trade or the start of a swing, right? If you want to go way out in terms of put contract dates, you could look for something, much further out and potentially lower, right? The next major area I'm seeing would be around 26. Not saying it gets there again all in one day, all in 1 week, but now that we are moving outside of this overall area of consolidation, I would have more of a bearish slant here inside of Urban Outfitters. So that's going to wrap up the video. 9 trade ideas in addition to all the companies and broad market that we covered. If you enjoyed the video or learned anything new, definitely let me know down below in the comments section or by giving the video a thumbs up. Don't forget that we will see you on Wednesday for the midweek market update, and I wish you all a green trading week.